Hello guys, welcome to the Train Parrot. Another very quick update in the middle of the weekend. Today is Sunday, and as you probably know, Sundays are quite tricky to trade, so I want to give you an update on how things are going, but be very careful if you are planning to trade any of these setups. First of all, we're going to cover the daily, and I'm also going to cover the 4-hour chart. As you can see here, there's some interesting developments that are currently happening. There's some potential squeeze forming on the 4-hour. I'll cover that just in a second. This is going to be a very quick video. So let's look at this. My expectation on the daily is to form a channel going down, a parallel channel formed by this red line here and this white line that currently is our support. We have currently a hidden bullish divergence that could imply some movement to the upside, but at the same time, we already have some movement to the upside. Yesterday, we made a move to 66K almost. And one thing that I'm very tempted to do is to move this line and to make it touch with that point there. It's either here or here, but the point is that this forms some sort of falling wedge. And the only problem with this setup is that there are two little touches of the red line. As you can see, there's just 1, 2, or 3 that were resistance at the same area, all of them around here. So it's kind of a bad quality setup for saying that this is a breakout to the upside. Although currently for the day we are at an RSI slightly above 50 and pointing, implying that potentially we might make a move to this higher end, and finally I might be able to find this channel down. The channel down is a setup implying that I'm expecting to see a bounce with a top and then some potential continuation to the downside. And that is on the assumption that I'm expecting further downside. That could be completely invalidated. So we need to be prepared for the opposite plan as well and adapt as the price action is progressing throughout the week. On the 4-hour, I can see that there is a very interesting setup formed by this dotted red line. The reason it's interesting is because it's got too many touches, starting from the 5th of March, which was a very painful day. You can see here there was a sell-off, so there was a lot of volume in that touch. Then we were about to break to the upside here. That was a fake out, another fake out here. So the question is, are we going to see another fake up to the upside when we meet again with the dotted red line? Or is this red line at the bottom holding us, telling us that potentially we can do that final flash to the downside? So this is not a channel where we have a crystal ball. We don't know. What we do know is that there's a momentum squeeze forming here, and we need to be paying attention, because if we close the 4-hour above this dotted line, the chances increase significantly for a move to the upside, a potential reversal here to the area of RSI 60 or RSI 70. That could be two good targets to take. My only downside with having a target of 60 is that if this breakout here at an RSI 52, that's very little reward for the risk of entering here and then getting faked out to the downside. So usually we need to find a decent risk reward, and this targeting the 60 is very little, and targeting the 70 is high risk on the opposite side. So it's a good reward, but the risk is too high, because if you look at this whole structure formed by the yellow triangle, you can see that we lost this level, and targeting 70 means that you're betting on coming back as bullish as we were all this time in the past, even that now have lost that bullish structure and we are forming a rejection structure here. So the trend is your friend, and since the structure got broken, at least on the 4-hour, I will say that there is slightly higher chance here of filling this area here, the bearish area formed by the purple to the red zone around here, rather than that breakout to the upside. But again, the price is the king. It's a weekend. There can be any sort of manipulation going on here, so be prepared for that. I'm not telling you that I'm reading currently my crystal ball and I know which side is going to break out, but let's be prepared for either plan, okay? And make sure you have a look in the description. I have a new partnership with Bing X, and the first people to sign up with my Bing X link are gonna be really happy because there's some really good bonuses going on there. There's one for 6K, and the first 100 people to sign up with my Bing X, they are also claiming a sign up bonus for $100, no questions asked. The reason I'm bringing in Bing X to join the family with OKX is that Bing X offers KYC, non-KYC friendly exchange across most of the countries, with the exception of Hong Kong and China. So if you are anywhere else living, it's a really good option for you, since you won't need to do the KYC. In US, Canada, and in UK, you're going to need a VPN, but still you can use that exchange. The exchange is allowing you to trade with futures perpetuals. All right, guys, if you enjoyed this quick video, hit the like and leave me a comment. Stay safe. Try to not overtrade during the weekend, just because you have some extra time and then getting wrecked by Monday, typical Monday reverses what happened during the weekend. So be careful with that. All right, bye bye.